So after doing all that hard work, that strenuous work, finding a great company to invest in, you stumble across one, and so you buy some shares. On the trading platform, it says that your shares have gone up in value, which is a good thing, and it means that you've made a profit, right? Sorry to burst your bubble, but you could be wrong. And it's because some investors make this simple, itsy bitsy little mistake. But don't worry, I've got the answer for you guys. Just keep watching. Hi guys, it's your favourite YouTuber again, Dami Solari, and you're watching DS Learning Finance. Whoa, whoa, whoa. Don't forget to subscribe, by the way. But before I tell you guys what that answer is, I've got to tell you guys about trading platforms. So most people know what trading platform is. For those who don't know, don't be like ashamed. It's fine. Okay, be ashamed. But yeah, a trading platform is as it says on the tin, literally, it's a platform upon which you can trade. So it's normally a website based that allows the public or private investors to go in and buy shares in the stock market. That's what a trading platform is. It's a platform upon which you can trade. Yeah, you got that. And so what they do is that they show you a generic view of your investments. And it's quite sneaky, to be honest, because they tell you the truth, but not the whole truth. I know you heard that line before. After your transaction has gone through from buying/selling shares, yeah, what these trading platforms do is that they give you an estimation of your current investment portfolio. And notice how I said estimation, because it really is an estimation. It's not accurate, guys. It's not always accurate. And what you find is that a lot of trading platforms, they ignore small fees, small taxes, small investment charges, and behold, that really does accumulate over time. For instance, some trading platforms will show you the bare minimum, i.e. how much does it cost you to buy/sell those shares, and also how much does it cost in terms of transaction fees to place that order. So yeah, it can show you that. You can have other trading platforms that can show you that maybe and a bit more. So maybe they may include stamp duty, and you can just have other trading platforms that even show you even more than that. So they could show you all of those things that I just mentioned, but also maybe mention the hidden charges that you don't really realize until you've actually gone through the transaction. Majority of the trading platforms hide at least one sort of transaction fee, one sort of charge, one sort of tax, at least one thing that will be taking money out of your pocket directly. So what this therefore means is that that big amount of money that you initially brought to the table, that you brought from your bank account to your trading account, that gets smaller. So that hundreds of thousands of pounds that you wanted to invest in me one day, whoo, that tens of thousands of pounds, and even as low as that £300 that you wanted to invest in, that gets smaller. I'm going to segue in a little bit, and if you guys really notice, I didn't say anything lower than £300, and that's because, in my personal opinion, there's no point investing in a stock or a share in the stock market when it's anything lower than £300. I have a very good reason for this. Watch this video to check out why that is, okay? Because I'm not going to tell you that here. You got to watch it. Back onto the video topic. Yeah, I would suggest using this little itsy bitsy trick. And the best part is that all you just have to do is go home, get on your computer, or you can actually get on your phone, get on your tablet. They normally have tablets nowadays, and open something called Microsoft Excel. Yeah, Microsoft Excel. My answer for this particular question is to physically stay on top of your investments, i.e. track your investments. I know it sounds so simple, but I promise you guys, this tool is so effective. You can't rely on these trading platforms because you know that they're gonna be not necessarily telling you the whole truth, but telling you a little bit of the truth, and therefore distorting your vision, your portrayal of how your investment's going in your portfolio. You don't want that. You want to know the hard facts. What is the real picture? Where are you situated? Are you in a profit, or are you in a negative? Or are you in a sort of limbo phase? That's what you want to know as an investor. You want to know the hard facts. So what better way to actually know that and to actually track it yourself? So this requires updating your, whatever you want to call it, investment tracker, Excel file, updating it every time a transaction is made. So when you buy or sell shares, cool, how much did it cost you to buy those shares? And how many shares did you buy? Cool. But what additional fees did you have to pay? How much was the transaction fee? How much was the stamp duty? How much was the additional fees? Some investments require additional fees, like mutual funds. So how much did that in total accumulate to? And therefore you're able to physically say all of this money has gone here, and therefore you're able to really sit down and analyze whether you're actually in a profit zone or a negative zone, a loss zone. And I guarantee you guys, if you use your personal tracker, set up with Excel, nice simple Excel sheet just to monitor all your investments, and you compare that with the trading platform, with what the trading platform claims that in terms of estimation of your account, you'll notice that there will be a difference, and that difference will be additional fee, will be additional charge that you have to pay, which means that either one, you're not making as much of a profit as you thought you would, or two, which is even worse, you're making a loss. And I know there's going to be some of you saying, you know what, I don't care, because it's only a few quids different, it's only $1 difference, it's only €1, it's only 0.1% difference. And I've just got one thing to say to you guys: compound effect. For those of you that haven't seen my video about compounding, or you just want to find out more information about it, I suggest you check it out here. I've left the link for you guys. But yeah, back into the topic, compounding is such a powerful tool in the investment realm, which is like a double-edged sword, to be honest. If you're making a profit, it can exponentially make you money. But if you're also making a loss, it can exponentially make you a loss. Now, looking at the perspective that we're speaking on, we're speaking about losses. So with compound interest, the two things that you require is time and interest, a change. So your money needs to change in the sense of either it goes up or it goes down from when you initially bought it. That is required for compounding. So what I'm trying to say is that even though you can have like 0.0001%, if given the sufficient amount of time and / or sufficient amount of interest and / or significant amount of money, then it can really significantly add up. And just to put it into perspective, something as small as 0.5%, so you know that stamp duty, that can affect your profit by up to 10%, if not more. So make sure you personally track your transactions that you make in the stock market, because that's the only way that you can say, I know the total amount of money I've actually invested and where my money's gone, and therefore how my position is right now. How does it look? Am I in a profit region? Am I actually in a negative region? It's your favorite YouTuber again, guys, Dami Solaru. I talk about financial management, I talk about stock market investments, and I also talk about property investments. Giving you that consistent content, you know? You guys know what to do. Like, subscribe, and share. DS, learning finance. Whoa, whoa, whoa. Bye, guys.